back to another weekly episode, guys. I'll keep this episode very short. It is just that nothing has changed from the previous update. We are still struggling in terms of movement in the market, and I think this is going to continue. Hopefully, for those of you who have been here for a few months, this is precisely what we've discussed many times, week after week, that the last quarter is going to be very tricky in the market. So this difficult phase in the market is actually being led by in the US market, the Nasdaq, which is extremely important in our market, Nifty Bank, the financial space. Again, it's very tricky. In recent times, I attempted to build positions in the FMCG ID space. That also hasn't worked out. So you're getting this signal from the market that there are only some selective pockets in the market where if you're able to identify in the real time, then you will be able to make some money out of it. Else, this is a very tricky phase in the market. It does not mean that you sell off your portfolios from the month of March, April that you built, but it means you got to be very careful in terms of how you build positions. If you see a sector that is getting set up, it does not mean you go ahead and buy 100% in it. You buy gradually, you increase your positions gradually. It is just that kind of a very difficult market. And quite frankly, I sometimes feel that the market itself is really confused as to what is happening. You're seeing these long-term correlations getting broken down in the market between asset classes, and it's a new realm for a lot of financial assets also. Plus, in my view, one of the biggest things that the world is facing currently is lack of leadership, quite frankly, because you can see that ever since the last conflict began last year, that is between Russia and Ukraine, you could see how fractured and how hypocrite the world is, the leadership is. And as of now, every country has their own agenda out there. I don't quite frankly think anybody cares for citizens of any country, no matter where you live or where people are facing problems. It is all a phony kind of a atmosphere. It looks like a game to a lot of countries, which is quite unfortunate, and probably that is what is reflecting in the stock market also. If you've heard the comments of the Fed chairman yesterday, he still hasn't ruled out rate cuts, and I was listening to a couple of analysts on CNBC US. They were kind of criticizing that, but if you put yourself in the federal chairman shoes, you would understand why he's saying that, because again, there is no visibility. There is no visibility whether conflicts are coming to an end. There is no visibility about the impact of this on oil prices, on commodities, on cost of basic goods and services. So it's a challenging time, and I always tell you that your recent positions or your portfolio is always your biggest indicator as to what is happening. In my portfolio, if I tell you in my mid, micro, small cap, I have some top 6-7 names left. Those are still fine, but all my recent large cap kind of trades that I've attempted, whether it has been in banks, whether it has been in FMCG, whether it has been in IT or metals, also have failed miserably. By failed, I mean it does not mean I've exited. By failed, it means it's just not performing. And as of today's market closing, whatever recent large cap portfolio I was attempting to build, it is down about 2.89%. So 2.89% for large cap in a span of 20 days, it is relatively a big number, because remember, these are large cap names, these don't fluctuate a lot. So when this environment is there, obviously I tend to get a little defensive. I'm not a huge believer of using options or those kind of things to hedge positions, but at times I do hedge positions by maybe having my large cap positions open and going short in Nifty, so that if markets were to fall a lot, I would manage to get out with no major damage. So it is just that kind of environment, and I don't think that environment is going anywhere. And quite frankly, I'm not able to understand the short-term movement. If you look at the chart of Nifty here, Nifty is just fluctuating in this band of 400 to 500 odd points. And any one of you who's an index trader, I won't name the source here, but I was reading a lot of users writing that every index trade is failing in the market. Just to correct a couple of things, I don't think there was any trade there in the index below this point. If you have been attempting any long trades in this particular region here, I would tell you, you need to review your way of trading index, because that was not right. So in index specifically, I have been sitting out, waiting for an opportunity. That opportunity is not coming. I usually don't tend to short sell the markets. And technically, I would tell you, when there is a base nearby, when there is so much of congestion in the market, this is not the right place to open up short positions also. So technically also, I don't think there was any short trade. And plus, what is happening is that you're getting these frequent gaps, frequent reversals on the downside, then a gap, then again a gap. Who knows, on Monday we'll get a gap here, or maybe a gap down. So it's becoming a very season of gaps. That is what sometimes we all refer to. That is back in the market, and whenever gaps are playing around like this, it is always better. It is always better to step on the sidelines or have an approach that I have. In gradually buying positions and gradually accumulating positions and those kind of things. So in the US market, if you look at the chart of NASDAQ and maybe S&P 500 also on a weekly time frame, if you look at it, if we manage to close this way, these are two back-to-back weeks where we are seeing long wick candles. Not great. And ever since this reversal candle played out, do a count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. How many bullish candles do you see in the last 12 weeks? I would tell you only this candle is relatively bullish. And maybe this long tail here. Otherwise, no. So if you're in the US market, or if rather I would be trading US markets, I will mark this out. For starters, I will mark this out. So this is a no trade zone for me in S&P. Similarly, in Nifty, if you see, I'll mark everything out. This I have marked out as a no trade zone for me. I won't trade index between 19,300 and 19,800. Why should I participate in this choppy kind of a market where I will just get shaken out. My short positions will be shaken out. My long positions will be shaken out. So you got to choose which battles you have to fight. Am I interested still in certain large cap spaces? Of course I am interested, and I have been buying into IT, FMCG, some bit of metals also. But when I see nothing is working out, and quite frankly nothing is working out at my end, I just told you I'm down about 3% in less than a month on whatever I've built. What I generally tend to do is, again, drastically reduce position size, because when you're trading poorly, and remember, we all at some point in our life trade really good. Sometime in our life we trade not so good. Our form is not so good. You got to scale back. You got to reduce your position size. And I think in this particular phase, if you look at the title of the video, it is about unlocking your mind in trend trading. There are a couple of things I'm now going to relate with sports. Because I've always preferred sports in my life. I like watching various types of sports. So anything and everything that I do in my real life also, I try and link it with the stock market. So the path to being an average trader or a loss-making trader and reaching a level where you start making money from the market, it's actually a mental barrier, nothing else. See, right from Richard Dennis, who shared his wisdom about trend trading, to someone like Stan Weinstein, Mark Minervini, David Ryan, Jim Roppel, all these legends of the market have already taught what trend trading is. So I don't want to repeat all that. But why is it that there are some people who still manage to do well? There are some people who, despite going through the teachings of Stan Weinstein, Mark Minervini, do not do well. I was getting other day a comment in my community that every Tom, Dick and Harry is now following Mark Minervini. Do you still think these things will work? And my reply was that all of us can pick up a cricket bat and stand in a proper posture, but can we drive like a Kohli or hit sixes like Rohit Sharma? No, you cannot. You can have the same set of tools, but in the end, it is skill that matters. It is skill that will take you from point A to point B, and it is your mindset. Now, mindset is a very loosely used word. You keep hearing trading psychology, trading mindset, those kind of things. I'll give you some specific examples. That when you learn, or when you realize or think more about it, you will be able to understand where you need to make some adjustments. If you've been particularly interested in sports, it cannot be that you have not come across the concept or the barrier, the mental and physical barrier of the 10-second barrier that you've heard in sports. Now, if you haven't, then Google about it. The 10-second barrier basically was about sprinting, about running 100 meters in less than 10 seconds. And this used to be a barrier that no human being was able to break. And back then, a lot of scientists had given a lot of explanation as to why this can never happen. Body physiology wise, or a lot of parameters they had conducted experiments that this cannot happen. And then one fine day, I think in 1966 or 1968, I don't remember correctly, in Olympics, this particular, I think, record was broken. Then it was again broken, I think, in 1977. Then 1983, Carl Lewis did it. Jim Hennis was the person, I think, who broke it. I don't remember. Somewhere I'm getting the name wrong. And then in 1983, Carl Lewis did it. Then subsequently, this started happening. Now, this is a sport, so the example that I'm giving you is about different athletes. I'll come to how this relates to trading also. And now, last when I was reading about this, I think there were about 160 or 170 athletes who have now gone past this barrier of running 100 meters in less than 10 seconds. Why do you think for such a long time this barrier was never broken, and then suddenly post 1990s, 95, then everybody started breaking it, and Usain Bolt did it, I think, in 9.76 seconds in 2008 Olympics, which is mind-boggling. It's because this mental barrier of something that cannot be done is broken by one person, and then everybody follows. Everybody starts dreaming about it. Everybody starts preparing about it, and then they eventually do it. There are countless such examples. In basketball, records set by Larry Bird, Magic Johnson, the great Abdul Karim Jabbar, was shattered when Michael Jordan came in, and he took the sport to a completely different level. And then now, if you see, LeBron James has gone past Michael Jordan also. But had Larry Bird or Kareem Jabbar or Magic Johnson or even players prior to those had not set those benchmarks, you wouldn't have imagined Michael Jordan reaching a particular level, or even LeBron James currently reaching this particular level. And in that league, I would also take the name of late Kobe Bryant. I mean, a brilliant player. It's a season of World Cups. You take example of cricket. There was a time when this barrier of 10,000 test runs was something that was unheard of. And then came our very own little master, Mr. Sunil Gavaskar, who went past that. And once he broke it, in few years, Alan Border did it, and then many other people went on to do it. And the great Sachin Tendulkar, when he ended his career, he ended at 16,000 something runs, 16,300 or 500 runs in one day. Why should we forget what Virat Kohli is doing? 49 centuries was the benchmark set by the great Sachin Tendulkar, and you ask anybody, they would have said it's impossible to reach this feat. In fact, it was Sachin Tendulkar, if I remember correctly, during his retirement farewell, he spoke about this fact that he sees two players breaking his records. That is Rohit Sharma and Virat Kohli, and both have done in a very different kind of records they have broken. He became the first batsman to cross 200 at the age of 37. That is Sachin Tendulkar. Till then, nobody, even the great Vivian Richards, was not able to do it. And then suddenly you saw so many people crossing that barrier. 200 now. Rohit Sharma has done it 3 times. So there will come a time when Brian Lara's 400 is going to go. And I will also tell you, there will come a time when some kid from somewhere is going to come and break Sir Donald Bradman's record of 99.99 also. Why does this happen? It happens because once you get confidence or the path that you have to walk upon which you will break your own mental barriers, that is when you begin to realize success in stock markets also. I'll give you an example. I'll take up example of FMCG itself. There used to be a time in my career when I used to identify something trading in a range, and then the breakout used to happen, and then the price would be going up. I would be feeling very good about myself, and then after a couple of days I would see this particular thing happening, up and down, and then suddenly price would move below my average buy price or a bit lower. I would completely exit. I would exit because I just could not tolerate that loss figure in my account. And then what used to happen? A market used to move sideways and then make a new high after a couple of months. And I used to be sitting there looking like a fool, thinking, what mistake have I done? I've analyzed the trend properly. I've done all the work. My position sizing was there. And despite of that, I lost money. Everything was right. I did not realize that what I'm facing here is actually a mental barrier. Is a mental barrier that I need to break through. Because when you are taking a breakout trade here, your stop loss is the lowest point of this particular range. So in current trade, this is my stop loss for FMCG, nothing else. It took me a lot of time to realize that. So look at today's candle. This is not a good candle. I know more downside is coming. But have I adjusted my positions or have I exited my positions? No, I haven't. I haven't because it has taken me many years to get past this barrier of reacting on candles without the stops being taken out and then looking like a fool and price making a swing high. So this is why, because trading is such an individual business, we are sitting in the room with no one. We don't have a benchmark. That is there in trading, and quite frankly the benchmark that is there in our trading on social media is ridiculous. Crores and crores of profit, that does not happen in real life. So a reasonable benchmark is something that you have to set for yourself, and that benchmark is your performance only. And this is where we differ a lot from sports. In sports we always have a benchmark that is being set. Whereas in our own trading, it is actually these nuances that are your mental barriers that you have to break past. So mental barrier or mental kind of a blockade could be anything. For me, it was not able to ride a trend because I used to get very nervous. For you, it could be anything. But it has to be broken just once. It has to be broken once because once in your life, or I'll again give you my example. Once I was able to negotiate this phase of not chickening out or not getting scared in this middle portion of the trend, and once I saw this swing high getting formed, that was the turning point for me. It was a turning point for me because I learned to control my emotions when the price was doing this. I learned the ability to take pain in my portfolio, and then that was a mental freedom kind of a thing for me. And you got to understand that to unlock this potential of your mind in trading, you have to live through cycles. That is why I tell you, in August, September, if you would have recollected my discussion, when price was doing this, this was in July, I think this, there was just one remark I was making consistently, that whoever is buying here is going to face real kind of troubled times in quarters to come. It's because they are coming into the market when this expansion kind of phase has played out. This is a huge mistake in trading and investing. Rather, you should start looking into the market in a calculated manner when you're seeing lower high, lower low. Currently, we are not seeing lower high, lower low at all. But had I been trading in the US market today, with price constantly making lower high, lower low, I would be religiously scouting for opportunities to latch on to whenever the trend stabilizes. Why? Because if you don't do the work here or here, you are never going to realize this. Forget it. By the time you are bringing in money here, it's already too late in the market. So ask yourself today, is this the good time to bring a lot of money in the market? If the answer is yes, there's still some time left. If the answer is, no, this is not the right time to do anything, that means you have to precisely start looking in for opportunities. That is the difference. That is the mental barrier that you have to break through. And yes, then comes a time like COVID and 2008 crisis when this low keeps going lower. For that, you have a lot of tools, stop losses are there, breadth indicators are there to tell you whether overall things are fine or not. Those kind of things, those kind of subtle adjustments you can actually make in your trading. But I hope you get this point. One more, in trading parlance, if I have to talk in terms of barrier for a lot of people, is position sizing. I'll again bring you to an example of, let's say, ID sector here. Or FMCG. I'll discuss FMCG itself. I'll just remove everything. So let's say FMCG formed a really good Wyckoff base with contractions, although there was no decisive breakout, but on little smaller time frame charts, breakout was there. One mental barrier for people is to put in all the money they want to at this point. This barrier I've seen a lot of traders are not able to break. And then price moves lower, that it hits their stop losses, then again it reverses, and then again they start building a lot of positions here. And 1 out of 10 times they'll get lucky, they'll make some 3-4%, get out, and that bad habit will remain with them forever. Instead, your mental barrier here, or the right thing rather to do, is put up 30% positions here. When price retraces, again breaks out, put up another 30% position here. Then again, when the price pulls back, again it kind of breaks out, put remaining 30% position here. Yes, this is a mental barrier. This is a mental barrier because if you study historical trades of great traders, that is how they have scaled in. So like in sports, perhaps Michael Jordan took a lot of inspiration from Larry Bird, Magic Johnson, Sunil Gavaskar may have taken a lot of inspiration from Sir Donald Bradman, or there were some amazing players back then. Like Mr. Tendulkar would have taken inspiration from Vivian Richards and Sunil Gavaskar. Virat Kohli has taken from Vivian Richards and Sachin Tendulkar. Shubman Gill is now taking it from Virat Kohli. So that kind of following the footsteps of the legends is extremely important. It's important because it helps you break your mental barrier. And number two, you are walking on the path that has been laid out by these legends who have actually done so very well in the market. So to break the barriers of trading, mainly trend trading, there are two essential components you require. Number one, you should know what path you need to walk, which is very clear, because in this day and age, if you cannot be profitable in stock market, then you never will be, because there is so much of free content, good free content available on YouTube, on Twitter, on so many different platforms that I cannot tell you. There are so many techniques that work that people have shared. It's just because of your laziness in case you're not yet profitable. The second component is identifying what is your barrier and how you have to challenge that barrier and break it. For some people, position sizing is the barrier. For some people, it is riding the trend. For some people, it is stock selection. For some people, it is instrument selection. For some people, it is time frame. And for some other people, it is choice of trading strategy. So these are some very basic things that if you don't get it right in your trading right away, you're going to have some disastrous result. So I hope you now understand, the importance of mental barrier in trading, and how you need to counter this. It's not going to be easy. It's a way out that only you have to find. But if you want some suggestion, let me know in the comment section below. I'll try and help you out. So we'll now finish the overview of the complete market. All right. You look at the structure of Nifty Bank on daily time frame. It is just not looking good. Nifty Bank is just not giving you confidence. It is still in a stage 3 kind of structure. Can you look at the yo-yo kind of market that we discussed? That is what is happening. This is a nothing but yo-yo kind of a market. You've got to be very careful. And who knows, now in the next few weeks we are going to see one more up leg. That's what is happening in the market. Nifty IT, personally I was expecting Nifty IT to do really well. It started moving, but now it is stalling. But for me, the way I trade, I'll mark this as a trend reference. I won't do anything until the point this is violated. That is just who I am as a trader. Nifty 500 is still fine. Even on higher time frame charts, if you see, it is still fine. That means the broader market is still in a relatively healthy structure. Dow Jones, S&P 500 I've already covered, not doing well. For those of you who like, you can look into Nifty Healthcare and Nifty Pharma. These are forming good structures on higher time frame, although I just don't ever touch these sectors. FMCG, I was really hopeful that FMCG would do well. The breakout has happened, but now it is retracing back. So the way I am as a trader, I'll cut out my positions below this. Until and unless this happens, I'm just not worried. We'll see what happens. It is just part and parcel of trend trading. And the mental kind of barrier that I sort of explained to you. Gold, look into gold. So above this point, gold will get into a higher high, higher low structure. After that, there would be many traders who will be focusing on gold. I would want to pull back. Let's see what it does around pullback, or maybe around this region here, because this is a previous kind of swing high. Let's see what it does here, then I'll be interested. UK oil, this remains a very important data point for you guys to track, especially because there is just no leadership in the world. You just don't know what is happening. Hypocrite kind of behavior by a lot of countries. The gold will give you a lot of inclination as to what is happening, whether we are heading into further kind of troubled waters or not. So gold is definitely something that will alert you beforehand. Nifty Finance, Nifty Bank, they remain in a really poor structure. So energy, if you see, energy is in a fine structure, but again, does it have within itself the capacity to turn the tide for the market? The answer is no. Auto remains exceptionally strong. This is perhaps the one sector in high beta that is just continuing to move up. So I don't know whether risk reward exists in this or not. Consumer durables is also fine. Infra, on higher time frame charts, most of these sectors look fine. It is just that if you look at mid and small cap, it is just struggling after that Tuesday scandal. Still no major movement, only select pocket is there. Realty sector has been strong, seeing some retracement. If you look at it, in Indian market context, majority of sectors are actually still in a higher high, higher low structure, whereas in the US, majority of sectors are in the lower high, lower low structure. So this tells you that US, being the mother of stock markets, the driving engine of the world, is heading in the opposite direction as our markets. Our market wants to go here, US market is heading there. It's not that our markets cannot sustain. It's that a rising tide will move all the boats in one particular direction, in the direction of the tide. And it's much easier to go with the tide as opposed to going against the tide, right? So that is the kind of market, and that is also precisely why we are seeing so much of yo-yo kind of movement, because the world is suggesting something else, our market is suggesting something else. Personally, if you tell me, do I find anything wrong in the Indian markets, I give a lot of weight to the banking sector. So I don't like the fact that banking sector is now deviating away from 50 DMA. Remember the teachings of these legends of stock market. Bad things happen to the market below 50 DMA. Bad things happen in the short term below 50 DMA. So I don't like this. I also don't like the fact that even Nifty now is slipping below the 50 DMA. It's 2 sessions in a row. It's spending more time below 50 DMA. I don't like this. So that is why it is a phase where you got to be careful. It is a phase where you got to take it slow. It is a phase where you don't need to overanalyze. There will come a time when the markets will start moving out of the range. You will see a lot of stocks breaking out, and then a lot of stocks having a follow through on the upside. Follow through means after the breakout, you'll see movement on the upside. Right now, what is happening? Stocks are breaking out and then suddenly falling back in the range. So it just tells you that it's not a healthy market. It's not a really horrible kind of market also, because things are just not collapsing, at least in our markets. But in the US market, definitely there is a lot of volatility, global market uncertainty. So it is just a phase where you have to sit out and just be patient. So hopefully this video was helpful. It was not a technical analysis per se video, but it was a video about your mindset. It was a video about correcting your mental mistakes. It was a video about how you can cross that barrier in trading that is actually stopping you from growing. If there is something you need to discuss with me about your specific problems, you can write to me in the comment section and I'll revert back to you. Please do so on the Saturday itself, because Sunday there's another match, and the way India is playing, you don't want to miss a ball of any of the matches. So have a great weekend ahead, guys. Take care, be safe, and I'll see you next week.